kind of always thought that PE was like a training ground to operate a company because private equity is the promised land. Of course, being really good at finance is really important in finance, but then when you get into the operating world, it's not the number one thing.
So you go from PE to operating, you're at a $3.9 billion company or more, and you leave to go join a company where you're the first non-founder hire.
A lot of people were definitely like, what are you doing? So it's not like so difficult to run a focused company, but what happens is it's really difficult to say no as you get more and more successful. That's actually what happens. So the problem is that especially when you're young, especially when you're hot and there's all this money thrown at you and there's all these opinions and no one knows exactly what they're doing. I think the discipline to just like say, no, we're gonna do this thing, that's like a lot harder as companies get successful and more things come to you. And I think that's an important piece of this all.
Art Levy, Michael Tannenbaum, welcome to Change Order.
Thank you.
Happy to be here.
Excited to have you both. So Art might be like the most watched episode behind Ryan Serhant so far.
Let's go.
And one of the things that we spoke about on that episode was jumping from really the venture capital world and the investing world into the operating world. You did the exact same thing, just not from the VC side. To start off, just why did you make that jump?
Actually, I always planned to. When I was younger, I lived in a neighborhood with like lots of VC private equity. And my dad always would tell me, he'd be like, Mikey, none of these people can run a gas station. And I think what he meant is like they can't really operate a real company. And it's no, whether that's true or not, it's what I thought. And so I kind of always thought like that PE was like a training ground to kind of operate a company, but that was my orientation actually. So that was always the plan.
So what was that process of going from PE to deciding what company you wanted to go to and trying to lock down a role there?
It was very dramatic or traumatic. I don't know what I remember at the time I was like very worried because you're on a clear path. You're in private equity. You're making a lot of money. Things are good. And there's not a lot of people that I worked at this place, Hellman & Friedman. And it was like the conventional wisdom was you go to business school and then you try operating just to kind of taste it for like the summer. But then you obviously go back to private equity, right? Because private equity is the promised land. And you're already there. So I think for me though, I went to this wedding actually in New York when I was living in San Francisco, sat around this table. Everyone was like, yeah, we're getting like this hedge fund. And I remember I ran out of the wedding and I was like, I can't do this. Like, I don't want to do that. I want to do something different. I want to be an operator. And so it was like I was very nervous at the time. But what I was doing was like reading a bunch of articles, trying to get into Fintech because that was my area of interest. And then meeting a bunch of people. And, through being in San Francisco, which was intentional, I purposely went to a private equity in San Francisco. I met a bunch of people in Fintech and then found the right fit with SoFi.
Why SoFi though?
SoFi I think the right, kind of my framework at the time was like, I want to be at a place that has product market fit. I didn't even know that term, but I just meant like working. And I wanted to be at a place where it didn't feel like it had already arrived. I remember like, as an example, I went to Lending Club and like, they were like, oh yeah, like we already have floors 7, 8, 9, and 10 of this building lease. Like it's going to be packed by the time you get here. And I was like, all right, this is over for my mind. Like I just wanted to be on the ground floor. So I felt like SoFi was early enough. And also I didn't realize this at the time, but I had like an intuition because you do learn stuff in private equity and like the customer of SoFi being kind of more affluent and like, younger, going to, they called it high earner, not rich yet, Henry. That concept of like starting with them young and then moving with them and growing with them over time, that made intuitive sense to me. It wasn't necessarily articulated in that way, but I was like, oh, this is a good business. Like this is a good business.
Mm-hmm. So your chief revenue officer, I think I saw SoFi was worth $3.9 billion when you left. Is that?
I think it was maybe a little higher than that, but regardless, Sure, it was good. And I joined at 75 million.
So you go from PE to operating, you're at a $3.9 billion company or more, and you leave to go join a company where you're I think the first non-founder hire.
That's right.
Like, why the hell did you do that?
Yeah, a lot of people were definitely like, what are you doing? Including my in-laws and Arthur. Yeah.
Yeah.
There's a lot of people were like, oh, I remember my father-in-law was like, oh, I kind of thought you were like, he was like, I was just getting around to even thinking chief revenue officer was a real title. And now like you're doing nothing.
I remember what you said, what I said to you was that like, you were telling me how when you got to SoFi and you would come back to New York, because I think one of the things about California is that everyone's trying to build. And so like the whole status BS, like I think it's less there. And so Michael was telling me, he's like, yeah, like I'm in these parties in the Hamptons and like people used to be like, oh, I don't know what SoFi is. Like I work at Goldman Sachs. And I used to be like, Michael would say, I'm like, you're a VP at Goldman Sachs. Like no one cares about you. And now SoFi, everyone knows what it is. Like I'm coming up in the world. And then he goes and jumps to join 2 random Brazilians.
Yeah, who were 8 or 9 years younger than I was. So yeah, definitely a lot of people thought it was dumb, but I obviously didn't. And I kind of wanted to get on the ground floor of something. And I felt like I had done my time at SoFi and that there was no path forward because I was like so much younger than everyone. I was like 15 years younger than everyone else on the management team. And I was like the hotshot kid, but I kind of need to change the paradigm if I wanted to do more. And I felt like I wanted to get on the ground floor. And I thought Brex was a really good idea. Like I had been the VP of finance at SoFi. I had managed the corporate card and I was like, oh, this is going to work. Like this is a good idea.
That makes sense. So you felt the pain yourself.
Yeah.
By the way, I did not realize you two knew each other before Brex. How'd you guys meet?
Well, there's different stories of that. I mean, I think we're both from Boston and we actually met.
Boston Strong?
Yeah, we're Boston Strong. We met at a vacation. We met on vacation.
I don't remember that.
Okay, well, we are like extended, I don't know, some people that my family was friends with.
Our friends. We went to like rival high schools.
When you were kids, you're saying?
When we were kids.
Yeah, we were in high school, like in Cancun, where a lot of families were going away at Christmas time. Arthur was there.
The Jewish family.
The Jewish family situation.
Not Miami, but Cancun.
Not Miami, but Cancun. And like we played volleyball or some kind of thing at his hotel. You were staying at like, I feel like a Ryu hotel.
That sounds right.
Right. Like this is a real story, right? But Arthur just denies it. And there's a reason why he denies it, because he was not as cool as he is today.
We really reconnected, let's say, in 2013 in San Francisco.
Right.
So what were your first impressions of your reconnection with each other back then?
So the roles had been reversed, right? So Arthur was now cool and I was a little less.
Yeah, I remember Michael said to me, hey, like we've actually met a while ago and you were like the nerdy guy from Nobles that got into Princeton, but like I don't really see it because like I don't actually think you're that smart. And then I said like, that's fair because like you're definitely higher IQ, but like I feel like you don't really know how to talk to people. And then I think there was like an immediate friendship.
Right. So as most friendships start, right? Like that.
That is absolutely incredible. What do you guys feel like led to actually the friendship there? Like, what did you guys see in each other that made you guys get closer? Because you both ended up at Brex, for those of you that there are people that are watching that don't know.
Yeah, I think complementary skill set, right? I think that's helpful because I think so many times when you are so similar, like you don't necessarily want to, if you're talking about a professional friendship, right, which we broadly have, then it's like helpful to have somebody that maybe has a different perspective or that does something better than you. So you can be like, okay, well, I think that they know more than I do about that.
And I will say, like, being honest, it started off more of like a mentorship. Like now, probably the apprentice has overtaken the master, myself being the apprentice.
But meaning you were the mentor.
No, meaning I was the mentee. Now I'm the master. But yes, like Michael was an incredible mentor to me in that early period when we reconnected after San Francisco. Because I saw him at SoFi, I saw him scaling and doing something really interesting. I, at the time, was at a PE firm that I wanted to leave for Teespring, which turned out to be a good learning decision, not a good or like the company, went on to struggle. But I think like the decision points that I made over time, the way I thought about joining a startup, a lot of that came from Michael.
It's interesting because I feel like this is a good topic to just poke at for a second, which is that you mentioned that you didn't feel like Michael was good at talking to people. And when that happens in San Francisco or New York and you meet great founders, like that can be pretty jarring for most people, especially at a young age. Like, how did you overcome that? Were you just used to meeting people who had trouble kind of having conversations, or how did you build that friendship?
Yeah, I'm being a little facetious. It was just clear to me he was super direct, right? So like we're at a party, someone's like, hey, like, it's just like he was very direct in every way that he answered questions. And I was like, okay, well, like this guy seems very smart and very direct. Like if I ask him like, oh, let's go to coffee, I want your advice on my career, he's either going to say like, no, I don't want to go to coffee with you. Like you're stupid and bad. Or if he comes like and goes to coffee with me, then like the advice I'll get, like I should probably take it. I think like one of the things I do well is like I can identify people that are good at things I'm not good at. And like I just follow what they say. Like taking advice. I'm pretty good at taking advice, I think.
Is there any advice that you would then give to folks who are kind of getting into their career right now and meeting folks that are very direct?
I think that everyone comes at the advice they give from their seat. So I remember when I was going to join Brex, I called my friend who's the managing director at a large PE firm, and he's like, I don't understand this valuation, and like this company's burning a lot of money. And then I was like, okay, well, like I'm just going to, I love this guy, but like, I'm going to put his advice in a box.
And people like that are always like, oh, you need like 2% to go. And you're like, yeah, okay, well, that's not happening.
Exactly.
Right? Like I got so many of those advices.
You need to know who you're asking and how they're coming at their lens of life. And so I think like the advice to young people would be like, ask advice from the right people about the right topics. Don't ask your mom what startup to join, because especially as a Jewish mom, she's going to freak out. My mom was like, why are you leaving finance to join a schmata company and then to join a credit company? Like what is going on here?
That's incredible. All right. I want to ask the master a question. So you were talking to Art. He was in the venture world and you were already at Brex. And you had some pretty great roles over there. Why'd you pick up the phone and like reach out to him or vice versa and try to get him over to Brex?
Well, one thing that was unique and has always been unique about Brex, I think the founders, because they were young, they were like, let's bring in good people. They always wanted to meet good people. That's very like starting from like the first day, it was like, give us the best people, which a lot of people say, but like I would say Brex really does. And they, everybody that's been close to Brex would say the quality bar is really high. I think Brex pays well. That's, it's part of the whole thing. And so I had already introduced Arthur to Enrique pretty early. I was like, look, I think this guy is like probably one of the best people. It was really for the idea of like rewards partnerships. When Brex first started, we were trying to get like partnerships with other startups. And I felt like Art had this really good network, very commercial guy, right? A lot of relationships. And I was like, this is probably the best person we could get to run our rewards partnerships and just like overall partnerships within Silicon Valley. And so we had met Art, tried to convince him, I think then. Yeah. I think timing wasn't right. Brex was really small still. But then
financial decision.
Yeah, there comes a time like in a startup when you have imperfect information, there's the information advantage when like you just know it's going to work. Like I felt that at SoFi, I felt that at Brex, I feel that at Figure, and so it's like and you're like, look, like if you just listen to me, like you will get rich. And I feel like there was a version of that call that I gave to Arthur, which was like, this is the time. Like and I think when we first called, there was more risk, but then it was like, this is working.
Yeah,
and like people don't know yet. So like you should come.
No, I remember the call vividly. So he calls me and he said, hey, I know you didn't join last year, but it's really working. And I just signed, because the thing about Michael is like, he's actually very good at a lot of things and he's also good at partnerships. And so he calls me and he says, hey, I just signed a distribution deal with First Republic Bank. Rest in peace. Yep. $14 billion company at that time, November 2018. He says, hey, like, they want to compete with SVB on corporate card and they don't know or they don't have a corporate card. So they're going to sell or resell my corporate card alongside their bank. And it's going to be a distribution partnership. And they're a $14 billion company and we're a 50-person startup. So like, this is going to work. And then I heard that and I was like, okay, like this is going to work.
So interesting. I mean, one of the things when I think about you and like, I met you a very long time ago, it was like a decade ago now, like, I definitely sense some of the things that Michael's talking about, which is that like you're an absolute grinder and like you have very high EQ and the ability to build relationships with lots of people. But I think there's a lot of like squishiness when people are like recruiting and saying, oh, they seem great. And it's like a taste thing. But then they can't get into like the tactics of like, okay, what was it that I actually saw like back then? When you think about like Arthur coming out of venture and joining a company, was there anything that you were trying to suss out in your conversations with him to figure out if he actually would be that great?
That makes me seem more thoughtful than I probably was at the time. I think that I just felt like I guess, Arthur, I knew he had a huge network. He helped me kind of navigate, frankly, marrying my wife, right? Because he was a big part of the first date situation and kind of getting us in there. So I just feel like he had a lot of finesse. And so I'd seen him navigate situations and social situations, like kind of same as you would partnerships that I thought were good. So I just kind of had observed. And then I remember this is kind of an interesting anecdote, but Arthur was his own business card for Halloween in San Francisco, which is like, but it was almost, and if you think about how Brex started, it was like a startup for startups, right? And if you think about like in Hollywood, why are there all these movies about Hollywood? Right? It's because people love to watch Hollywood people. Like, if you look at the winners of Best Picture and all this stuff, it's like often movies about Hollywood and movie making always do better than they do like nationally because people want to watch this stuff. And I felt like that was a big part of Brex. It was like we were startups serving startups and we were one of the first ones to really do that, if not the. Yeah. And I was thinking like, who's better to run BD for a startup serving startups than someone who has his own business card for Halloween at like an all startup, party. And so I just felt like he was kind of like very much a part of the ethos of the company and the vibe or whatever you want to say.
So you guys went from social-ish / professional friends to working with each other.
Yeah, manager.
Yeah, manager, yeah. Right? And then you ended up switching roles. You took his role. What was the hardest part of kind of switching that relationship and starting to work with each other?
For me, Arthur's not the only person, not the only friend of mine that I've worked with, and I've never really had that issue.
Yeah.
I don't know why. I don't know if that's unique to me.
It's because you're direct.
Yeah, I think it's direct. And also Brex was good about written feedback. Mm-hmm. I think written feedback is helpful because it allows someone to kind of read it, take it, and it's not as, they really they're reading it there and it's not about you, it's about what's written. I don't know. I think that's it, but
no, I think Michael mentioned it about Brex, but I think it's more of like, it's Michael and he brought it to Brex around bringing good people, but it's really about bringing and grooming really good young people. Michael is the number one proponent of bring in good talent, scale them over time, put them in positions where they have to stretch, like higher for slope of curve, not for like point in time. And I think that when you have someone who has that confidence in you and they bring you in, you don't want to fuck it up. And so yes, it's a friendship, but the friendship was always about like a lot of the stuff we talk about is like professional stuff. Like there is stuff that's personal, but it's about getting better and like growth mindset. I feel like a lot of our conversations are about like, hey, I have this problem. How should we solve it? And that's not always true about all of our friends. I think you and I have a similar relationship. It's about like the relationships you have with like your ambitious friends rather than maybe like friends you've had since you were toddlers, and that's a really important but different relationship. And so with Michael, he brings in folks to companies he's at. People trust him because he makes those companies better, and then he makes you better at those companies by giving you feedback. And so it's a beautiful, virtuous cycle.
It's kind of interesting though, because you ended up stepping into his role and you just had parts of his role, I guess. And yeah, you had more oversight. I feel like I hear a lot of stories where, a person, an executive takes a different role in the company, somebody else steps into their old role, and then like they kind of still have their hand in that bucket.
Well, you see that all the time with like Disney and, all these companies, public companies, obviously honestly, bigger scale.
Drive people to the ground, right? Because they're like, well, shit, give me like, a little bit of leeway here and like, let me do my thing. Did you guys ever run into that, or like, how did you avoid that?
I don't think I don't know. I don't think we did run into that. I think that's more on the me part of it, right?
Yeah, but you never did that. You were sort of like, okay, like now I have nothing to do.
Yeah, well, that's why I left, right?
You are.
Yeah,
no, seriously.
I think I did kind of work myself out of a job at Brex. I felt like that. And when I, obviously reading your prep doc, which we're so far not sticking to at all, but that's fine.
Love that.
One of the questions was like, what is a hard transition or whatever? When I became COO, that was definitely a challenge because I think when you're a CFO, it's like you know exactly what you're doing. When you're chief business officer, you know exactly what you're doing. Then I was like this amorphous COO, and I didn't like that job that much. And I felt like there really wasn't anything to do in some ways. And yeah, like meddling in other people's stuff is not effective. So I would more take the view of like, let me know when I can help, or like, how can I help you navigate the company? I'd been around a long time, but that's ultimately why I ended up leaving, which is just like, I felt like I didn't have a job. And then as Brex, we were overstaffed. We had to scale down. And it was like, I said, if we're being first principled about this whole situation, it was like, okay, I either like do these jobs below me myself and like become the chief business officer and the head of operations and the head of finance, or like I leave. Because if I'm just objectively looking at the situation, and I think that, going back to being direct and just like, I think if you can objectively look at your role and what you're supposed to be doing and add value, then you would avoid sort of some of the things you're talking about.
Some servant leadership right there.
It's really crazy. I don't think there's many people in this world that would have handled it like Michael did at that time. Like a lot of people are like just grasping for things to do, or like, hey, like I'm the COO, like I want this job and I'm going to protect it at all costs.
I'm going to pull on that thread and I'll go back to the prep doc, which is like,
sure.
I think you were just saying like maybe what might have been the most challenging time in the company's history from your perspective. I mean, Art, when you reflect back and you still are at Brex, what do you think about the most challenging time at Brex was, and how did you guys go about handling it?
Well, I think it's probably for me that same time period that Michael's
fall 23.
Fall 23. And I think like that was the time when sort of like we had been trying to do a lot of things, and we were over the short term, we call it like sugar spike of like the SVB crisis, which we did an amazing job of capitalizing on. But by the end of 23, it was like, like there's definitely some things that we need to improve about the business and the way we're running it and the focus areas. And it was like a real come to Jesus moment. And I think specifically for me, it was challenging because like I made the decision of like, hey, like I want to be here and ride this out and help kind of turn and fix the parts of the company we need to do so. And that was at the same time that Michael is saying, hey, like, I think like my job here is done. I've taken Brex to where I need to take it, and now I need to go do something else. And so it was both a moment of like, hey, there's a lot to do, and also like the person that I'm used to being in the trenches to do it with, like is not necessarily going to be there. Obviously he's like a phone call away, but it's not the same.
That makes sense. I think I was talking a lot with a founder recently about like the idea of focus, and it feels like you're alluding a little bit to some of that.
Yes.
Like you guys had to like get back to your roots. And I don't know if you guys know who Todd Graves is. He started Raising Cane's. And like he's just been focused on
that food.
He's just been focused on chicken fingers, right?
Yeah,
it's like
a
$10 billion company now. He owns 90% of it. It's kind of crazy. But I've been reflecting a lot on like, what does focus actually mean? When you guys think back to that challenging time, like any lessons learned around focus and like how you guys define it and are trying to kind of take that forward in your careers?
Yeah. So I think to me, it's like such an amazing thing to have been a part of like something so simple. It's exactly right. Like as a company, we were just focused on doing too many things. We had decided we wanted to be like a really big company. And so we were trying to focus on too many different customer segments. And when you're doing too much, like things fall through the cracks. And so essentially that's something I'll take with me the whole career, the rest of my career is like, like Frank Slootman says, like when you have 5 priorities, you have none. And so it was really like, okay, like we want to just build for the customers that we have and scale with those customers. So it definitely means we do stuff like Brex is serving enterprise customers, we're serving mid-market customers, we're serving startups, but we're serving them along their journey. And we're really thinking critically about like every focus area of the company and making sure it's tying to that customer and that long-term customer. There's no short-term projects. There's no like coming in like, oh, I was just in a meeting with Jason Shuman and he's investing in like this vertical software, like let's go build it. Like the company in general had like a calming nature to it has a calming nature over the last 18 months where I feel like we're just moving really quickly, but everyone's rowing in the same direction. Like I'm not like I don't row. I didn't do crew at Princeton, but like I imagine it's kind of like that. Like I feel like we're moving really quickly and pace is accelerating, but it's all in the same direction. That was not true in the fall of 23.
How does that happen though tactically? Like, is that a communication thing? Is that like at every stand-up you guys are going over like the one important thing, that you guys need to be focused on and creating a framework?
So I think it starts with one decision maker, right? Like we had a co-CEO model and then both CEOs decided like one throat to choke. So I think first of all, have one throat to choke. And then
that's
then from there, we had like one product roadmap. And then even on the sales go-to-market BD side, everything we did had to tie to that roadmap in the sense of like when I was pitching the Navan partnership, the Zip partnerships, like those have to get into one roadmap in order to get built. And so it's a little bit like a VC firm in some ways, I imagine, where it's like everyone's pushing the investment and it's like, oh, like, should we build out enterprise procurement? And it's like, well, probably not. Like, I'm looking at all the other things we want to do and there's only 3 engineers left. Like, we should definitely partner on that.
Yeah.
Sorry. No, you go. I think it just drives better cohesive decision making because you get everyone in the same room to have those conversations.
It might be interesting because I was at SoFi, scaled super fast, hit some stumbles. Look, now I think it's like a $15 billion public company, obviously worked, one of the most successful fintechs. I think Brex, super fast out of the gate, probably faster than SoFi, hit some stumbles. Now, obviously one of the most successful fintechs in the payment space. And I think what happens that's interesting in Silicon Valley, and I think is almost unavoidable when you raise a ton of money. Like, this is what I think what I'm saying is that a lot of things Arthur's saying seem like the way you ought to do a business. But what happens is when you start getting really hot and you start raising a lot of money, you get to this kind of like unlimited set of things that you can do because people are coming to you, talent's coming to you, investors are coming to you, partners. Companies are coming to you, right? And everyone's like, we should do this together. We should do that. You should hire this guy. You should hire this girl. You should do this. You should do that, right? And it's like you have this like abundance of things that you can do, and you get tempted to do all these things. So it's not like so difficult to run a focused company, but what happens is it's really difficult to say no as you get more and more successful. That's actually what happens. So when you're looking at like what Arthur's talking about, you could be like, well, these seem obvious, like everybody doing the same thing or not having, like those aren't that hard to do. The problem is that especially when you're young, especially when you're hot and there's all this money thrown at you and there's all these opinions and no one knows exactly what they're doing, right? I think I kind of think I do know what I'm doing, but I'm saying I think a lot of people are like, I've had imposter syndrome all the time, running a company, taking over from a founder more recently, et cetera. And so it's like, you're like, well, do I exactly know? And this person's saying to do this. And so you just get into this world of like, there's a million things. And if you look at I think the discipline to just say, no, we're going to do this thing, that's like a lot harder as companies get successful and more things come to you. And I think that's an important piece of this all.
Can you maybe give me an example then of like how you think through somebody coming to you saying we should do this and you just being like, well, that's an easy decision. The answer is no. And here's the reason why. Like, what is that like mental model in your mind in the way that you make decisions there?
Yeah, I think so. We implemented this thing called the Big Rocks at Brex, which is it's not unique to Brex. I think it's from YouTube.
Vern Harnish. Actually.
Yeah, or something.
Mastering the Rockefeller habits.
Either way.
You know everything.
Yeah, so I think having those and agreeing on them you don't have to do it that way, but OKRs change. People always give you like 30 OKRs, but like Big Rocks is more clear. And if you, and Arthur says, you can't have 5. I at one time had 5. Today I have 3. But I think just kind of focusing on it's just a really helpful framework because if you establish that, sure, there are things that can change your big rocks, things change, right? But you basically can just evaluate against those and just keep it simple is what I do. And so, I get pitched all the time, oh, buy this company, whatever. And I'm like, look, this is not really what we're focused on. Appreciate it. Thanks.
Can you share one of your big rocks?
Yeah, well, I think we really have 2, right? We're basically building out our mortgage product to be kind of the most successful and largest, what we would call LOS or origination system combined with capital markets, right? So just expanding what we do. We're building this sort of blockchain-based way to originate mortgage in a very unique way. And that's massively taking market share from Fannie Mae and Freddie Mac. We could get into that, but it's complex. And then we have kind of this experimental, basically DeFi marketplace where other people can bring non-mortgage assets to what we're doing. And so it's a way of bringing third-party fintechs to what we do, if I'm explaining this well. And then the last one is go public, essentially. Right. And that's all we're trying to do. We're trying to grow market share of our core thing and expand it into different use cases. We're trying to develop a way, and you asked about AI, which is a part of that, to bring third-party stuff into our marketplace. And then we're trying to go public, and that's it. Right. And so it's if you come to us and say, let's do this, it's well, is it one of those 3 things? And if not, no.
I guess when I hear that, I don't hear anything in regards to like, okay, we need to drive cost structure down. Like it's really, you want to increase market share right now.
Yeah.
And so does that make it a lot easier then when it comes to making decisions around what AI that you might want to implement in the company and how you want to navigate that as well?
Yeah, I mean, we're fortunate that cost structure isn't a problem today. So that's, because one of the things that we do is that like with our process, our partners, when they do a mortgage, right, it's done in like $1,000 versus 12,000 industry average. So cost structure, we've already taken a ton of costs out of the system. So I think for AI, yeah, it's more about like, how can we increase adoption of what we do? And how can we use AI to bring, I think it's the second part, Big Rock 2 for us, where I'm really focused on AI, which, I think.
But you're talking about how to like implement AI probably in your product, right?
Yeah, like one interesting way. So you think about what Figure does, like we've standardized the capital markets across mortgage, right? But as an example, one of the reasons why I was hired by Brex was because we needed someone to build out our own capital markets, underwriting, all that. But there's a world where Brex, Ramp, Airwallex, Rippling, whoever, all are using the same underwriting model and the same capital markets kind of framework and are just competing on UI, experience, features, which is kind of the world today roughly, but it didn't evolve like that. And so like the underwriting has like little differences. And so they each pursue their own securitizations and their own stuff. If Figure had existed before, we could have been that standardized rail, if that makes sense. Mm-hmm. And so one of the things I'm trying to do with AI is like bring in third parties that have their own underwriting model and their own stuff and use AI to evaluate that they're actually doing what they say they do and then tokenize those assets with a validations layer.
No, it makes a lot of sense.
Okay.
I feel like companies are doing a better job right now implementing AI into the products that they sell to their end customers more than they're doing a good job of implementing AI internally in how they actually operate. Do you guys agree with that statement or disagree?
I would agree. I would agree with that statement.
And so,
which sort of makes sense.
Yeah, we're trying to drive value to the customer, right? That's the main goal. So that's where we're thinking.
But what's fascinating about it is if all these AI native companies and these cracked engineers in San Francisco start launching companies in different spaces and they have fundamentally different cost structures, they're going to be able to like undercut people, with from a cost structure perspective and counter position. So I'm wondering, like, how much are you guys thinking about, like, how do we actually use AI internally right now?
So we're definitely, I think one of the I guess being candid, we definitely see opportunities for AI in kind of document processing and that side of the world. The way AI has sort of come into established companies, it was like you typically have like some person that's doing it, usually like data science, or I don't know, actually, this is my experience, so I shouldn't say for everyone, but I imagine this is how it goes. At least it was in my experience. And so a lot of times those people are more technical and they're interested in technology. And so they want to like use it in cool ways. And that's at least what happened in my experience. And so it was some of the things that we started on weren't saying like, how do we take the cost to produce down as much as possible? And what would be the thing that we would do most? And if you were to do that based on where AI is today, you'd probably look at things where you don't need to have 100% accuracy and certain, but where we started was like a more complex, sort of technically interesting use case. And we're changing that a little bit to focus on like just our overall velocity of our funnel. But yeah, so I think that the way AI has been like an experimental budget for a lot of people. Yeah. Right. And so and as a result, it's been experimental in the way it's been implemented.
Yeah, we use it a lot on like the KYC, AML side, also document processing. So like it helps us probably expand the funnel in some senses because it's like a centaur approach where there is obviously a human in the loop, so to speak, but we can evaluate more applications, look at more companies because we have these better tools. I think that's probably, or that's like where we're using it most on the internal side, but in a way that's also delivering value to the customer, right? We're getting people answers more quickly, getting them onboarded in a better way.
Yeah. I mean, I feel like you go out and you talk to a lot of people and it sounds like you do as well. Have you guys heard of any amazing use cases for AI, or have you guys found one internally where it's like, oh my God, this was a game changer?
Game changer, I would say not a game changer, more incremental. I do think one of the areas where I see AI being very impactful is loan servicing.
For sure.
So I feel like there's a lot about loan servicing, which is like, payments, collecting on payments, chasing delinquencies, where it's actually not a great tool for a human, because sometimes the best time to contact someone may not be when you're staffed. So like from that standpoint, I do see a lot of opportunity there.
You got to introduce them to Jake Cahan.
I know. We should.
Okay, maybe I should. Yeah.
January AI.
Okay.
It's doing really well.
Yeah. So that's one place where I feel like it's going to be a game changer. I do think that it's definitely adding value in chatbot, like, all document processing like we're talking about, but I would describe it as, at least today, it's incremental, right? It's reducing costs, it's adding value, but like the most complex use cases, the most complex customer questions, the most complex documents, you absolutely need a human in the loop, at least today.
Yeah, I think back to taking the conversation full circle, I haven't seen anything work really well on the go-to-market side. So back to Mike Cagney telling Michael, hey, finance, that's not like revenue generating. Same reason why I got into the revenue generating side of businesses when I jumped to startups. I haven't seen any of these like SDR tools or new CRMs, any of that stuff really move the needle.
Ironically, I think we're going to end up seeing two things happen at once, which is one, today CROs need to go in and they need to train their salespeople, and then they need to coach them. They need to use Gong in order to look at all this stuff. That feels like it should just be a heads up display for an SDR or an AE long term. Now, I don't think AI calling and selling people on high, ACV products is ever going to, replace the human. That seems crazy to me. But if I think about PLG motions and what AI avatars are now doing, in the fact that an AI avatar might be trained on everything from MedPick to BANT and all sorts of other techniques, it might be better than your inside sales team, who is not actually trying to be on the phone and go through a multi-month sales process.
Right.
I mean, do you guys see a world where that will end up existing?
I think so. I think in inside sales, we have, the way our partner model works is probably like everybody, we have kind of your A accounts, your B accounts, and your C accounts. And for the C's, I mean, you don't want to say, you never tell someone they're C, right? But for someone where it's mainly inbound motion and you kind of need to go through the motions, I think there's a world where that could be better. And also, the only thing that I can imagine you lose is those salespeople, the best ones are the ones that graduate. So, but I guess you'd find something else there. But I do think there's some kind of same with operations, right? A lot of the best people, they come in on the ground in this kind of role, and you see them kind of working better, faster, smarter. And then those are the ones that get promoted up. So I do wonder what will happen to that funnel. Because there's some people that are happy to be only focused on inbound C accounts. Yeah. And then there's some people who want more, right? And you want to find those people and get them to your A's.
Yeah, I think the PLG pure SaaS as a category, I think that's in trouble. I don't know how that survives in 5 years. I think you're right. It's going to be changed. Because I think AI is just making that motion so much, automating so much of that motion that I think that if you're talking about literally a space where there isn't a human in the loop and you're trying not to keep one in the loop, then I feel that's where AI will start versus obviously an enterprise product that needs to be sold. I don't see how that, it's obviously going to be disrupted, but I don't see that it going away anytime soon.
I mean, when I think back to the history of Brex, at some point you guys, I believe, stopped going after true SMBs. Is that right?
That's right.
That's right. Yeah.
And was that a cost structure thing for you?
It was two things. I think it was focus, because SMB is this massive category. And, just because SMB, in this room, we can say SMB, but if you're an SMB, you're not I'm an SMB, right? You're
there's a billion business.
Right. And so I'm a business. And I do this and I do that. And I think that trying to being so open to everything, you're kind of recreating the same issues that banks have in doing that, right? It was like, well, which ones do you give credit to and which ones are good for this product? And back to the focus point, it's like, now you're everything. And these businesses have cash that they need and some businesses need, like, so you're basically like need to be a bank, which we didn't want to be. And so it was more like we kind of had this market that we knew and that we wanted. And actually, if you look at the corporate card and expense management space, the needs of people get more streamlined from expense management as they get bigger, right? If you think about like how does expense management work at Louis Vuitton, Moet Hennessy, or whatever, like that company, versus how does it work at Oracle? It's probably not that different. Yeah. Whereas like if you actually go and say like, how does expense management work at like, you know, where I bought this coffee versus my wife's architecture firm, like it's pretty different actually. Yeah. So. Yeah.
It's kind of a fascinating thought exercise though, because when you guys had the SMB segment going, you were probably having people hop on the phone and originally and like close those people. And then you probably got a ton of CX tickets, which...
Oh yeah. Yeah, it was a mess. It was a total mess.
And you needed to make sure they understood how to use the product, which is also a lot of costs, or they churn in underwriting.
And there's the fintech. Yeah, the fintech, like one of the lessons in fintech, you know, you get like this, whenever you have a product that's giving credit, which I think is like an area of expertise of mine.
I hope so.
And confirmed. And I think that like people knew Brex as a credit card. So we were trying to offer them a bank account in the SMB space and then upsell them a credit card. But like the people that were coming to us were like, I want a credit card. Yeah. And then when you're telling people, no, like you're getting this bank account, which has a debit card, it's like not what people want. And because we were so known for credit card, it just wasn't working.
But I guess like, take that thought exercise further. Could you imagine like all those buckets I just walked through? That seems very like automatable in the world of AI, doesn't it? So does that unlock just new market segments for a company like Brex to go after, or even really all these small startups that are getting going in the Bay now?
I think that, yeah, short answer, absolutely, right? Like if you're going to lower cost to serve, you're going to make it easier for us to fight the problems and solve the problems we talked about when we went after SMB. But I think more broadly, what we're talking about is more like when like a segment of the market where it's not like all the problems and challenges happen because there's different verticals and you're getting all types of companies that have different use cases in the same segment of like the size, right? 1 to 50 FT, like full-time employees was how we define it.
It seems like it's both a product issue and an underwriting issue. Then.
Exactly. And then the types of fraud that we were experiencing, the way customer support had to deal, the types of tickets, there wasn't anything uniform about that. Back to Michael's point, the beautiful thing about it, spend management, is that the bigger the companies, the more horizontal the use case is what we found.
Yeah.
And so like, it's honestly easier and the ROI is bigger to serve like slightly bigger companies than in that really small space.
That makes a ton of sense. I'm curious if either of you, maybe both of you, have some sort of a belief around AI that most folks don't have today.
I do in financial services, which is like my main thing. Is I actually think blockchain is a bigger deal than AI for financial services. And if you kind of pull on the thread of what Arthur's saying, which is like, sure, you could add AI and lower the cost to serve from a support perspective, but it doesn't change the way you give credit.
Yes.
Right. And so I think like within financial services, at least, which is regulated and involves money movement and involves financial losses, like AI has been around in underwriting for a long time.
True.
And the companies that I've been a part of, all three, all have ignored any AI underwriting and focused on fundamental underwriting, right? SoFi was cash flow-based underwriting. Brex was cash flow-based underwriting, and Figure is cash flow-based underwriting. And you don't need AI to do cash flow-based underwriting. And so I'm not sure that AI is this massive thing in financial services, whereas like I look at Stablecoin and I look at some aspects of decentralized finance, and I look at what we've done in Figure in terms of just like how often loans move throughout the capital markets and are re-underwritten in all these like kind of senseless ways when they already were like what was true at origination is still true for the 30-year life of the loan. Mm-hmm. And I'm like, I think that's a bigger deal, right? I feel like that's not, a lot of people, and I'm not trying to be like this blockchain freak, but I just think like a lot of people are dismissive of blockchain. And there are some, blockchain like to quote Mike for a second, like he would say, the industry's done nothing to help itself because there's been so much fraud and so much ridiculousness. And we just haven't seen that yet with AI. That will come.
There's a lot of it happening.
Right. There's a lot of it happening, but it hasn't come out yet. But I do think that it's a more fundamental disruptive force within financial services. Probably not software.
Yeah.
Right. Definitely the reverse for software. But I think people are like, if I was a bank today, I would be more focused on blockchain than AI.
Yeah.
Sorry, one quick follow-up though. Do you put blockchain and stablecoins in the same bucket here, or do you look at them as two fundamentally different things, even if stablecoins are leveraging blockchain?
I think I put them in the same bucket in the sense that they are both, I guess, ways of moving money and aligning incentives in a paradigm that didn't used to exist. And so I think they're re-architecting the architecture of financial services. Both are.
Okay.
But why do you why are you asking?
Well, I wonder if you think that one will have a larger impact than the other, or you think they'll basically have the same impact long term?
Well, I think that blockchain is a broader concept, and I think stablecoin's disruption is a part of the broader. Yeah. I think of stablecoin as being like the oil of of financial services. It's sort of like, it's the currency, but the things that are also happening are broader than just that. So like just using Figure as an example, we have tokenized assets, right? We've taken what has historically been traditional loans, put them on a blockchain, made their attributes publicly verifiable, right? In a still way that provides privacy to the borrower, and made it so that when people buy these assets and they move around the capital markets, there's way less verification that needs to happen, right? But the way that they move through different parties is, and in many times, and will be increasingly so, via stablecoin. But that's a little bit figure specific. I definitely see what you're getting at, which is there are people who could adopt stablecoin as a way of moving money that may do nothing else within blockchain. But there are also going to be people who are like, wow, this is interesting. This is valuable. This is doing something differently. I might think about using a different, like I just was reading about a blockchain internet company that's like trying to, have like almost like the way solar works, where like lend capacity and borrow capacity in an internet, like in Wi-Fi. And the point is, like, I think that people would be more interested in potentially giving that a chance if they see stablecoin working.
Do people need to know that they're using stable coins? Like kind of similar to blockchain. It's like, it's a great technology, but like, I don't know what like code the software is written in, For
Brex, right? People are happy on the interchange Visa MasterCard ecosystem, the Brex customer today, right? They're not looking for stablecoin to change that. They're not looking to pay for coffee and stablecoin. Like that's not a problem today, right? And so that's not the problem Brex is solving. Why has Figure been successful in blockchain? It's one of the only examples of company that actually adds value in blockchain. And I think that's because they haven't made using Figure about blockchain. If you ask most of our 150 partners, like, how does Figure use blockchain? They'd be like, I don't know, like we know they do it, but like we don't really know. Like they might see a few examples of like how we register the lien and update it and stuff. But like we've kind of abstracted that, just like when people started using SaaS software and they were like, ooh, we're in the cloud. Like this is so great. They just use the features. Yeah. And so I think with stablecoin, it's adding value in places where money movement is hard today. And I actually think the place that, from my board seat at Brex, where I imagine we will get more value quickly is around the settlement infrastructure, the limits of ACH. Like a very tangible example is ACH has specific batches and windows that it can do, but regulatory wise, you have to hold capital against the amount of money that exists at a specific point in time, Friday, 5 p.m., whatever, Eastern. There's like, if you have a broker dealer, whatever equity is held there, you have to hold capital against that. But sometimes you could have someone who sends money in via wire, but your ACH can't go out in time. I know I'm like being very...
No, it makes sense because isn't ACH still like run on spreadsheets literally?
Yes. And so the Nacha files. Yeah. So as a result, like there's places where you could say, well, if there was a stable coin where we can move money in real time at the end of the day to sweep it out, and somebody would accept it, like Brex could dramatically lower its capital requirements. And so there's all like, the point is that, you have to focus on where's the real need versus like, where does it sound cool?
Yeah, but to your point there, like maybe there's not a quote unquote need that people can feel today, but isn't there like an opportunity there?
Yeah.
Like if you're going to dramatically reduce the amount of cash that Brex needs to hold on their balance sheet, why wouldn't they want that done?
I think they do want to do that. I think they are exploring those types of things, but that wouldn't necessarily be, that type of thing wouldn't necessarily, I mean, I know because, I'm on the board, but like I also know everybody. So it's a little bit different, but I'm saying, I don't know that like corporate boards are discussing those types of financial, that's just not something that would be discussed at the board level.
Well, what's fascinating is maybe to just talk about Chamath for 1 second, but like Chamath thinks that like Visa's in a lot of trouble because like will interchange be around, in 5 or 10 years? Do you think interchange will be around in 5 or 10 years?
I do, because I think that you have this consumers focused on rewards. If you look at where the spending has come, right, you have consumers earning rewards, happy doing that, and a very long tail of merchants that for whom the interchange ecosystem is working. I think there's a set of very large merchants that are probably unhappy with interchange. And, maybe I think if anybody can do something, it would be JP Morgan, who has like the largest customer base, plus they have the, they have payment tech, they have the merchant side, they could maybe do something closed loop like that. Question is like, will they? And what's the relationship between Visa and JP Morgan? And I don't know. But that's where I'm like, if you think about any one merchant, like they don't have the power to change the status quo, and any one consumer doesn't really have to change the power. So I don't see anything outside of someone who has enough of those levers. Capital One just tried to kind of do that with Discover in some ways, and Square tried to do that with being both merchant side and Cash App. So like there's people at the margin, but I don't know. When PayPal started and then Visa and MasterCard did that deal, right, you have to imagine that if you're at those companies, they're obviously, that would be a board that's obviously having this discussion, right? Yeah. And I would imagine they're, finding a way to make these partnerships just like they found Stripe and they found Square, and those ended up building on the interchange ecosystem. Blockchain is very fundamentally disruptive, but at the same time, the consumer habits and use cases of people that are satisfied with the status quo, it's going to be hard to break that.
Maybe to circle back to the original question there, do you have any beliefs around AI that other people might disagree with?
Well, I think what I was mentioning on that was around the fact that I think financial infrastructure won't be changed by AI in a material way.
But will you make any big bets on AI, for instance? Like, do you guys think there's going to be any jobs that just go?
I do. Yeah, I think that completely go. I think there's a lot of like content marketing, like, where you have people, if you think about like, what is content marketing? What is the average content marketer? Is like a non-expert that's hired into a role to become an expert and write stuff to like do SEO. And like that whole thing is changing, right? SEO is changing. Content is changing. And so I think like, but I guess a version of that, maybe like those people will start doing podcasts. I think it'll definitely, that's a place where I'm like, right now, if someone was to say to me, I want to approve an open rec for a content marketer, I would be like, no, right?
But to push back on that, wouldn't you just say, okay, that this person now has to put out, like 10 articles a week, and they need to be content marketing on like 4 areas of expertise because they have ChatGPT to help them create.
Yes, maybe. So or I might, but I'm also thinking like the way that SEO works is going to change a lot. I think
making content marketing less important.
Yeah, like I don't know if I would be spending incremental time trying to still do the same SEO game, because I think like that search is changing. So I would probably be switching the profile of person I was looking for a little bit, because, do you think that if you said to me, we're talking about Visa and MasterCard, I think that's very hard to disrupt. Yeah. If you said like, are people still going to be searching the way that they're searching today to find things? We're already seeing them not.
Yeah.
Right. And so like, do I think that articles like what makes a good corporate card? Like, do I think that's going to be the way people discover Brex in 2 years? I think like dramatically less. And so I think that whole ecosystem is one that's.
But so then the content person becomes more of like a podcaster, like.
Yeah, right. But that's not the same thing.
And video production.
Video production.
Like, because I feel like at the end of the day, you're going to need to optimize for LinkedIn, Instagram, and TikTok. Yeah, and X.
Yeah.
And whatever blue sky, something another.
Right.
Sky,
Yeah. So I just think like that is a world that I do think the web ecosystem of like the whole SEO ecosystem, I think is something that's really going to change. And it doesn't surprise me that would, because if you look in past things like newspapers really changed, right? And like certain things, but actually financial services, which is our area, that's not something that's changed that much with technology. Like, the UI has changed, but the fundamental infrastructure, to Art's point, going back years, like for whatever reason, financial transactions haven't gotten that much less expensive over time. And, loan yields, right? It's not like, mortgage, there's just a lot of things to do with interest rates and money movement and regulation. That means it's not like, if you think about like how different certain things are over time, financial services isn't something that's changing at the same rate because there's all these other factors.
Mm-hmm. You have a point of view?
I think I would say, I think the sales motion and like the outbound motion specifically will change a great deal. I think like the traditional SDR role will not exist like it does today. I think it's going to have to be, again, it's ironically moving back to more in person. It's going to have to be like, how many cold calls can you make while you have a model running in the background, sending thousands of emails out? Like the idea of like writing personal emails and then like sending it using like outreach.io, like that's not happening in a year. And like the profile, again, same as content marketing for like the first line SDR is going to have to change. It's going to have to be someone who's like, making cold calls, going to events, but also managing their AI that's sending out all these emails to help with first closes. So I guess like Michael and I are saying the same thing, that like maybe I don't know that I have a good job that goes away, but that's another area that I think like very easily will change in the next year or two.
And companies care about this stuff, right? Because going back to one of the themes of the conversation, right, is like the cost bar. It's like, most growth companies are not getting paid. They're not at the phase where they're getting paid for lowering costs, which is probably one of the reasons why you're not seeing, like, sure, I think if Brex or Figure or whoever were to pivot and be like, how can we just focus on using AI dramatically to lower costs? It's just like, we could do that, but that's not what investors are asking for. Whereas this kind of stuff people are asking for. And that's why it's going to change faster.
So if you just put an eye towards how do I increase revenue and not reduce cost, it does feel like there's a lot of opportunities to do that in a much more targeted way. Internally, how are you guys trying to bring AI into the team? Like, are you guys, you already mentioned earlier though, like, okay, these individual contributors who are probably at the forefront of this stuff in data science and engineering, like they're already doing it, whereas there's like a human incentive problem. It feels like at certain levels of the org, go back to content marketing, it's scary for someone to think my job's going to completely change. But to give you a thought exercise, it's like, if you get every customer, ticket and every customer call recording and you pipe that into an LLM, you're going to have all of the insights in front of you for all of your content strategy that can then be fed into another LLM to create a video using that to then be posted on social. So you really just need like a conductor or, an orchestrator to kind of do that job. And to me, it feels like obvious that like, well, if somebody figures that out, they're going to thrive. They're going to crush it.
Yeah.
But the people are so busy in their day to day, they're like locking into their screen, that changing that human behavior combined with the lack of incentive is like a little bit hard. Do you guys see that?
What I've been doing, which I think is hopefully effective, is I think you have to do that at like the GTM leadership level. So I manage that directly. Like we have this group of the GTM leads that we meet. They're like direct reports versus like having a CRO. Of course, you could have a CRO that was like really good at doing that, but I don't have that. So I do that.
You only have two roles now, CEO and CRO?
Right. Yeah. So, but also like, I think that's where you can sort of show people that, and kind of, you have to get the leadership buy-in, right? Expecting the content marketer to like bottoms up, be like, oh, I'm going to start doing this in my job is I don't think going to work. And so I've tried to do that, like, very simply, one, we have Enterprise GPT, which helps because it's an app on our Okta, right? So people can use that. And I'm using it all the time, showing people, like, especially very good with compliance, right? Because I find it very helpful with compliance, because you get told a lot of stuff and you're like, okay, like I'd love to see this regulation, blah, 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 read it. Like, what about, But anyway, I do think so I've kind of been trying to show it there. We've used it a lot with RFPs, right? Because those are so repetitive and answering the questions, but also just showing people like, I've even brought someone in as part of our offsite to kind of show like the art of the possible. And I think when you get leaders who are, ultimately held to a number, if that's going to help them get their number, they're going to do it.
Who'd you bring in for that offsite?
So it was like a person that is actually it's one of our angel investments. But someone that I know who's like doing agentic commerce, but he's doing something different, but he's he lives and breathes this stuff every day. And I had him like observe one of our GTM meetings. And I was like, so if you were kind of doing this, what would you do differently? So it's more like, not like one of these speakers that's like paid to come and talk, fee for service type person, but more someone who's like a practitioner building an AI company. Like imagine if we brought in Kushal, like the person I brought in was not Kushal, but like someone who's just like doing this every day and be like, oh, you should be doing that. You should be doing that. So I thought that was a very valuable session. I'll keep doing stuff like that.
Interesting.
At Brex, we have like a big focus. Obviously, every team needs to be using AI tools in the way they run their jobs. But we also, like you mentioned on the conductor side, there is like a SEAL team of like just focused on our AI and like how best to use AI as it like throughout the company. And like, okay, so like social is doing this and like engineering is doing this. And like, how do we bring those two together? Kind of exactly like you said. So like everyone is focused on it from a customer value perspective. So making the accounting integration better, making like the memos auto-populate after you spend money at a restaurant, but then there's a separate team thinking about like, hey, they're doing this in content, they're doing this in engineering. Like, how do we, like exactly what you said, take all the information and make it in a way that...
Are you reaping any of those rewards yet?
I would say starting, but not at full scale yet.
Do you think this is the year that like a public company comes out and says, oh yeah, we're seeing a lot of ROI from AI?
I don't know.
Didn't Klarna just walk back?
Yeah, I was just going to use the Klarna example. Like that was, I think, interesting.
But the irony there is, for instance, let's talk about Harvey. I think one thing that VCs are learning very quickly, our old way of thinking about businesses is not working anymore, because historically, companies that sold into enterprise, their net revenue retention probably didn't get better. It got worse. And their NPS probably got worse, not better. Whereas because the tech is evolving so quickly, we're now living in a world where like your NPS is actually going up over time. Your, net revenue retention is going up over time. Harvey is like great proof of that. So all these people on Twitter that were saying, oh, the business isn't working, like that's not true. Maybe a year and a half ago, it was like not a great product. But if you go talk to users today, they're getting a lot more value from it than they were.
So you're saying in the past with enterprise software, people were trying to make it better, but the rate at which they could iterate was much too slow to increase the NPS.
Yeah, and I think if you were to, we all probably use ChatGPT, right?
Yep.
So has ChatGPT gotten better?
Much better.
Much better, like a lot better. And so I do think that you're going to see that across every single product category now, which means that I think like, yes, Klarna made a bold decision and they were early, but they might have been too early. Whereas now I think we're finally hitting the market timing, inflection point.
Well, and I guess without knowing all the details of Klarna, I felt like some of that was PR. Right. Like, because, I think it was definitely good PR for Klarna at a time where people stopped caring about fintech and, Klarna, obviously the valuation dropped from its peak, which
just a little bit.
No, but that happens. That happens. Yeah. But at the same, so I think like some of that was just framing, how do you get people excited about fintech? And I think, Brex did a version of that. I think, all Brex's competitors have done a version of that, which is like, you got to attach yourself to what people are talking about, not only for like investor perception, but also for customer perception, right? Going back to one of the things we've talked about is like, the way that people have been buying AI is like, it's part of, it's a buying criteria now. And so, and Figure does this too with our partners. It's like, people want to know that we're using AI because no one knows what they're doing. So they want to believe that their vendors know what they're doing. And so I think like, that's definitely, in some way, so that was savvy of Klarna, I think. Like, I'm not even saying that in a negative way. I think that was a way of reframing the narrative around Klarna and fintech more broadly for a category and company that people were just like, ugh, like, I don't care about BNPL. I don't care about fintech, especially like 2 years ago. And so to come out and be like, well, we're using AI. It's like, oh, look at what Klarna's doing, right?
But what you're saying is super interesting because I think you're right in that like people now want to bet or companies want their vendors to be innovative and they're seeing that if they're innovative and using AI, the rate at which they can make the product better is much faster. Mm-hmm. And so like absolutely they're going to be ripping out incumbents for a next gen product, especially if they think that like they know the incumbent's product isn't getting better and the next gen product is getting better at a 10x pace. Like that's obviously a time to like make a change.
Mm-hmm. Cool. Well, we only have a few more minutes here. And Michael, I told you we would not wrap up at an hour.
All good. No, I'm a punctual guy, but it's all good.
So just like quick rapid fire questions for you guys. What would you say your biggest career mistakes were and how'd you get over it?
My biggest career mistake was when we lost our CFO, Adam, at Brex. And he went to Rippling, fine, good for him. But we were trying to be cheap, and I felt like we promoted him to CFO and we, going back to your point of like, did we really give it to him? It's like, I think I did give it to him fully in the role, but we didn't really fully do it in comp. And I didn't realize like, you know what, you got to really do it. And I think we opened the window, for that. And that was a lot. That was definitely a big mistake.
So I think my biggest mistake was probably so I was at a startup called Teespring that we've talked about on the last pod. And then I think that when that failed, I got pretty scared. Mm-hmm. I got scared about like startups and like San Francisco. And so I just like moved back to New York and joined a family office to do like investing. And it was basically just like 2 years kind of wasted because like as soon as I moved back and Michael, by the way, as a mentor was like, you're an idiot. Like, don't do that. Don't take that job. I didn't listen. And so that was just like kind of a little bit of a waste of 2 years. I mean, I did meet great people. That's how I met you. But I think like it was a time when, I should have just stuck to my guns, which is I love building. I love operating, just like find the next company versus like pretend that I'm going to be some investor. Cause like, that's not my DNA.
In many ways though, like it probably created good mental models for you on how to evaluate what makes a great business.
For sure. And like you can learn from failures, but I don't think that means that like failures are good.
True. What's a book that you guys have read that's instantly rewired the way you think?
Instantly rewired the way I think.
For me, I would say Never Split the Difference, Chris Voss.
Is that how you're getting all these partnerships done that you're announcing?
I think it is really, really helpful. Just like the way, because like negotiation is all EQ, which, as we've said, is like something I focus on and like have, I think, gotten pretty good at. And like the whole book is just about like negotiations, about making both sides feel better. Like things like mirroring, which is literally you just like repeat what someone said and like it changes the whole game. So I would highly recommend that.
Yeah, I mean, I'm more of a literature person, so...
Is there a conversation with someone that's changed it?
My favorite book
Maybe Moby Dick?
Well, my favorite book is The Sound and the Fury, which is Faulkner. And I think one of the interesting things about it is it's a book that's told from multiple people about a declining family. And I think it's just, that concept of everybody... I think one of the things that actually we both can do is try to put ourselves in other people's heads. Yeah. And I think that book does that.
Wow. It's powerful. All right. I like to ask everyone on the show one question. Art, you already know it, I think, but if you were mayor of New York City for a day, what's one change you'd make?
Wow. There's been a lot. There's been some good changes recently. If I was mayor of New York City, I would probably improve the subway stations. Especially, I would add the dividers. Like I would make it so you can't just push someone in because I feel like that's an unnecessary worry. Like there could just be blockers that opened when the subway, like kind of like they have in England, Yeah. And I think that would be better because it's like, why does everyone have to worry about being pushed in?
Yeah. Imagine if we were like Singapore and we had like the little lines and people actually followed them.
That would be nice.
What about you, Art?
I live in Los Angeles, as you know, and we have enough problems. So I'm more focused on the LA, fixing the LA city.
There you go. I actually thought of one this week, and I've never actually answered the question myself.
Do tell.
And between Mexico City and like Paris, I'm like, wow, they just have so many more trees than us. And trees just create such an amazing energy for people because I think we're meant to be in nature more.
Yeah.
When I think about why we're always stressed around here, it's like we're in a friggin' concrete jungle.
Yeah.
And so more trees.
Okay.
I'd probably increase the amount of trees about 20x.
All right. 20x.
20x.
Wow.
I mean, how many trees can you actually think about in your
That's
head?
a good platform to run on. Yeah. People will.
There's a Mayoral race.
Yeah.
So
trees and sidewalk tables.
right.
Yes.
Everywhere for all. Awesome. Well, thanks for joining me, guys. Appreciate it.
Appreciate you carving out a slice of your day to think a little bigger with us. Do me a quick favor. Hit follow, drop a 5-star review, and share the episode with one friend who's equally obsessed with building the future. Huge thank you to the team that makes every release sound effortless. Atomic Growth for the behind-the-scenes horsepower, the brilliant Catherine Thayer for steering our editorial compass, and Devin Natoni for getting each episode into your feed right on time. Their work lets me focus on bringing you candid stories and gritty tactics from the founders, operators, and investors, rewriting entire industries. Until next time, keep challenging the status quo, and I'll see you on the next change order.